We just witnessed one of the biggest sells in 2024 after one of the best days, and it has Bank of America saying that the top is in for 2024. Meanwhile, Warren Buffett has been selling their stocks for 12 days straight. So what does the data, the technical analysis, and the dark pool liquidity suggest happens next? Today we break down what really happened in the markets after the UK did a rate cut and whether the Federal Reserve will have to come in and support it very, very soon. With the S&P 500 falling to almost new lows, the NASDAQ going back to our major bull zone, and more importantly, Nvidia not being able to make a new low even though it did fall across the board, we have a lot of questions that we need to answer. And there are some good stories as well that came out of the last 24 hours. So as always, there's a lot of opportunity. Join us now as we talk about stocks, commodities, and cryptos together. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we'll talk about the macro, the data, and of course, the big earnings that are now out of the way. Apple, Amazon, and Intel, with Intel being the big loser over the last 24 hours, down over 20% in after-hours trade with massive job cuts coming. Now, we just saw Warren Buffett dump Bank of America stock for 12 straight days. Is this going to be an important factor? Well, we'll look at what's going on in the financial landscape a little bit later on, but do remember that he's been selling for a little while. It certainly is an interesting point, though, for markets, and it shows us again that he's starting to build cash reserves, probably with some kind of plan around stocks getting cheaper on the horizon. Maybe a recession is coming. Let's talk about the ISM manufacturing PMI. This has everybody worried. That's a report from Goldman Sachs from Mike Siccardi over on X. But this is the interesting point here. Basically, US ISM manufacturing PMI just went below 50, and it's been below now for quite some time. 20 out of the last 21 months it's been there, and that is reminiscent of previous periods, 1989 to 1991, which also brought some struggles across the economies of the world. If you take another look at it, you'll notice here, one of the things that's a little bit different though, is that US manufacturing has not really contributed anywhere near as much as it used to the GDP. And we need to remember, how can the GDP be so strong at 2.8%, yet manufacturing is falling off a cliff? It's because it only makes up 10% of the overall movement at this stage. Here's another way to look at the ISM manufacturing report. You can see here again, multiple times when we started to see significant weakness in this, it meant a recession was coming. And this has the market spooked, and of course really has the market saying the Federal Reserve better support this, or we're going to start doing some big unwinds across the board. And that's led to federal funds rates being really down. Basically, we are now looking at 3 rate cuts, 2.8 basically, by the end of the year. Now, the market is saying we demand these rate cuts. Will we get them? Time will tell. It certainly seems like September is now kind of locked in the bag. And it also means that, as we've long suspected, increased volatility is likely to be here from July all the way to November in one of the most hotly contested elections as well, being this year. The VIX futures structure has already shown us that, and we might be hitting a VIX 20 early here in August. So will we still be looking at a double dip style scenario? Well, I still think that is very possible. And remember, our base case here is around 5,300 to 5,350 for the SPY before maybe seeing a major pull up. We've talked a lot about how 5,400 and around the zone that we're at right now is actually not a bad level in itself, but this is still very, very possible. And of course, generally speaking, if we're going to see highs in VIX, we usually see them in August or October being the most likely months of overall volatility. This also leads into that discussion that we've had many times about if the Federal Reserve is about to cut in September, we often get what we call a pullback in time, a really wild sideways style market that is incredibly volatile up and down, and then the market will make a decision whether we are going into a recession or not based on how it reacts after the first rate cut. Remember, in many situations, it actually goes up after the first rate cut and then struggles 6 or even 12 months later. S&P 500 number of large down days has now gone up a lot. We were sitting at pretty much nothing, but now we're sitting at 10. So volatility over the last kind of couple of weeks here was being absolutely high compared to where we were. And we're now starting to get more into the normalized stats. Remember, there was no vol for quite a long time in 2024. Now it's there. The worst performing sectors, no surprise, were the best performing sectors over this year so far. Information technology might be up 25%, but it's dropped the most in recent times here. It's had the worst July. Communication services down 4.16 for the same month, again up 20.85. And what we've started to see a little bit here is the laggards started to pick up. So this has really been the trade of July. Things like real estate, consumer discretionary starting to pick up, materials, and one of my favorites, utilities coming through. I actually posted over on X, and one of the things we've been talking about together has been that utilities might perform incredibly well here in the late cycle. And we are certainly in the late cycle. Could we be in a crash though? Could we be in the beginning of a recession? That is a discussion that a lot of people are having. Well, let's take a look at basically what happens to stock markets when the incumbent decides not to run. Generally speaking, we can have a little bit of a weak start to August, but we do tend to come out fairly well across the board. Of course, there is always that one outlier that's pretty negative. But if you take everything into consideration, we are looking at a volatile time, but still probably a fairly positive time. Another point is here that in August, we tend to see in most election cycles a positive run through the month with a little bit more of a sell-off in September into October, and then often bottom coming into the election itself. This is basically what we call a pullback in time. So a rest from the market, and it goes up, down, all around, and really is good for day traders, for scalpers, and a little bit strenuous for people that are looking for the longer term. I thought we'd put in a couple of interesting long-term stats though. This one here is from Fundstrat, and Fundstrat, of course, are pretty bullish on the markets, there's no doubt, but they've been correct for a little while here, and they say that small cap signals are early cycle. In 11 of the last trading sessions, remember this is taken before the last 24 hours, the Russell 2000 traded a plus minus 1%. Basically, what that means is it was coiling. So it was sitting in this really tight range. Now, that's only occurred 10 times since 1979, and outside of recessions and bear markets, so we're technically not in either of those right now, so therefore this stat is valid. That, according to them, is an early cycle signal given years 1987, I want you to remember that point, 1998, again, remember that point, 2009, that's coming out of recession, 2011, 2020. So I think the most important points here are these two, 1987 and 1998. Now, both of those were close to the end of markets around the world. Now, of course, the US didn't suffer the same fate that some of the other world markets did during the early 90s, but there were contractions around that 1989 and, of course, 2000s period. So it showed us that we were actually in late cycle. However, the forward returns were really good for the Russell 2000 over these periods. And again, deregulation of the banks and the debt markets could have us in this type of thing where the Russell 2000 might struggle here a little bit, but as you'll see, there are some stats that are pointing towards, in general, if you look at the statistics, Russell 2000 possibly performing better over the next coming months. Now, we do expect this to be a possibility. Of course, Russell does struggle around this point. You'll notice in almost all of these cross sections, we struggle here a little bit, and then we end up following the generalized trend and going bullish. So I don't think it's time to necessarily panic here if you have a multi-month approach. Let's have a look here at another interesting fact. S&P 500 after the 10-day rate of change declines by negative 4% on the day before an FOMC decision day. Now, that's a lot of if, ats, and whats and buts, but basically with the index above its 200-day moving average. Now, we've got a couple of reads here, which I think is important. And again, all of these situations, if you went a month later, which is basically August being over, they were bullish. And it really brought a lot more volatility over this next week period. So could that mean that we actually are going to see this VIX 20, the 5,300, even if you've got 5,400, is that really that much of a concern in markets if you've got a bit of a longer term approach? Here's another one that's interesting, which is a movement here in the Russell 2000. You can see Russell 2000 implied volatility is nearly 10 points higher than the S&P 500 vol. That's been a decent but not perfect indication of a turn ratio in IWM to SPY. This is, of course, from Jason Gottfried. We sometimes focus on his stuff here to give us some extra stats. Now, what this is showing you is that if you use the combo IWM SPY, which we'll look at later in today's video, it's kind of showing us that we could be at a turning point. Now, in some of these reads, they have been negative. And of course, we've been in a very bad trend now for Russell 2000. It's been completely underperforming. But in most of these reads, we ended up seeing the Russell 2000 outperform the SPY for the next little period. So I think it's a very interesting point. And that coupled with this one, of course, we looked at the macro charts oversold indicator, which helped us to kind of define the lows of 2 days ago. Then, of course, we saw the big sell-off that's brought us back down to this level. But we also focused on this chart, which is the Goldman Sachs Panic Index. And, you cannot deny that it's been a pretty good read of bottoming factors. Now, I want to point out a couple of things here. It doesn't mean, the next day it's going to be an absolute ripper and everything's going to pick up. It means that we need to look for technical reasons to see bullish parameters. Now, we actually saw those on the S&P 500. I would have said as of the previous session that we'd started to turn bullish and that we expected to pull back to 61.8 fib, which I actually posted over on X, but we didn't get any bid. So this is where the kind of concern is. And you'll notice over here, we got the read. We actually fell down. We rallied super hard, similar to actually what we've done now. Then we dropped to a new low only by a little bit, and then we double bottomed and actually based off. Now, this was back in 2022 during the October lows, but you'll notice that this is not a bad read. In fact, over the last 2 years, it's had a 100% track record of being a buy zone. Now, does that mean you go out and buy the dip and dance and say it's all great? Well, not necessarily, and we'll look at that soon, but it does mean that there's clearly a correlation with something going on around here, and Wall Street does its best to, of course, liquidate as many of our positions as possible. Another thing I posted over on X, so definitely follow us there, is that we do still believe that utilities are going to be a very good performer. Now, I've mentioned this on the show now for around 3 to 4 months, and utilities have been this sneaky behind the scenes kind of sector that have been doing okay. It's actually had one of the better returns of the year now. And we still expect utilities to do well. It had one of the best last 24 hours, and I thought that was an interesting factor. Another factor we brought up in the previous video was that we saw Nvidia hit this monstrous high in terms of put-call spreads. Now, I would suggest that this is probably why Nvidia, while it did fall off, was not able to make a new low. There are still huge amounts of puts out there. This was marking close, if not right on, the lows of October of last year. And again, you cannot understate how important this is. Everyone was bearish on Nvidia leading into the last 2 sessions. Now, of course, it's sold off 6%, but it still isn't back down in those lows. Let's talk earnings here for a moment. The big ones are out of the way. Of course, we've got Nvidia still coming up, which is going to be the biggest earnings of this season. But Apple did okay. I say it hit basically target. And, the interesting thing about it is they managed to get that $1.40 number, which we kind of expected to happen. So that's a pretty good thing. And the overall volatility after hours was pretty much in line. A little bit less volatility from that stock. Apple also managed to emerge from a sales slump. Yes, if you didn't believe it already, Apple actually hasn't been doing very well for a while now. But guess what? They're back in the green. Does that justify super high price? Hey, who knows? But that is what's happened there. Apple has emerged from its sales slump, and it actually did hit right on the target. Amazon, on the other hand, was down a little bit after hours, down about 5%, missed a little bit from its forward relevance here. If you pause the video, you'll be able to have a look at some of the key points from the earnings call, thanks to the earnings nugget. And I thought another one was Snap, because this thing always sucks. And you'll notice here that it has been notorious for dropping monster amounts and also going up monster amounts during the earnings season. Have a look. I think it's down 20% after hours. I might be wrong, but 34.6%, 27.6%. This has got to be one of the wildest stocks from an earnings perspective. And it all really started here where it got super wild. Actually, it was October of 21. I remember that. 26%, then 40%. So it has been moving pretty much on average double digits per earnings season. And you might want to remember that next time it comes out because it's going to be pretty wild. Now, will we hold true to this stat? Well, it looks like we might not. During FOMC weeks, we usually end the S&P 500 bullish. Now, it was looking like that, but the last 24 hours has wiped a little bit of this off. So, interesting stat, maybe not to be proven correct this time around. A couple of other stats that I thought were good. Obviously, this one, which basically led to us believing there was going to be some volatility, then maybe some positive action in August, then maybe a secondary dip later on the year. At this point, it still is open. We don't want to be freaking out just because the market's dropped off. Basically, we want to be looking at it and saying, what was our base case? The weekly 20 moving average. So really, until this market hits below, let's say 5280, 5300, you've still got to look at it as a net bullish market with the most bullish overall breadth that we've seen in some time. Some people are now calling that a trap. I think it hasn't been proven that way just yet. ExxonMobil and Chevron also coming in terms of big earnings, and you'll need to be aware of those because they will move the stock market a little bit more, and energy in particular will be affected by those. So Chevron ±4 and Exxon is around the same from the options market. Let's now move over to randomly large dark pool liquidity. So we saw a pretty large amount of trade going on TQQQ. You can see here that we got this big trade from TQQQ that ended up leading into that $70 market, filled the gap, and then of course the rest is history. The thing sold off in a big way. But we did see some large transactions come out of semiconductors again. And here's another chance of having a look at the semiconductors. This is the 3X fund. And remember, we've been talking about dark pool liquidity building positions. So realistically, there are tons of trades here. And this is in the 3X bull fund. Now, I understand there's been a lot of vol, but in general, we came back down to where we saw 38 read. So what this is telling us is this could still be a huge Wall Street accumulation. Now, we long suspected together that semiconductors would weaken. We talked about this over a month and a half ago, and we suspected that we would get this pullback in time and it would probably come down. The worst case scenario is probably Nvidia around $95 because $95 is a huge gap fill, so that's going to be an interesting point. But this is where the dark pool trades started to come in, so something that's interesting there. I noticed also there are some other large trades that are starting to come in. S&P 500 in particular, having big trades here that led into a bull run and having this huge trade that came off the open of the previous session. And then the rest, of course, looks like history, a huge drop off from this perspective. Now, funnily enough, you might think, oh, well, that's super negative. Someone sold here and we're all getting destroyed from it. Well, actually, this is the same thing that happened back in the April drop off. We got a big trade down the bottom, and then we got a big trade that was met with sell demand, and then things went bullish. Now, at this stage, it's going to be hard to call the bottom is in after seeing that thrust, then the pullback back down. We'll talk about where the day traders might be looking for small signs, though. But it is possible that we go on and we fill into this gap, which is, of course, the 5350 zone and possibly even the 5300 zone. But this is not necessarily a bearish sell. Remember, this is how Wall Street does build positions. I wouldn't be surprised if a few large traders did see the previous price action as bullish and tried to get in. We also cannot forget the Whaley breadth thrust. It is a very good statistic when you go out and you look at the next 3, 6, and 9 month kind of runs. So do not lose sight of that. And also do not lose sight of the overall secular bull market we're in. News can often freak us out. And don't get me wrong, it's very, scary what we see on the markets, like the Federal Reserve coming in to support the market and all of these central banks around the world cutting. And eventually we're going to see, of course, a yield uninversion of the curve. But do remember, that's when you want to be terrified. When the inversion of the curve goes away and you're looking at 3 or 6 months later, that's the most terrifying part of markets. Now, we're not finished with the big news this week, guys. We've got more coming. We've got non-farm payrolls coming out in less than 24 hours. That'll show us how the US economy is really faring under the Federal Reserve's possibly too restrictive overall interest rates. And you'll notice the last 24 hours, we had an interesting kind of difference here. We had XLC actually up over the last 5 sessions, XLU now being the number 1 sector. And one of the sleepers, which has been REITs, came out of nowhere and, of course, has now performed the best or one of the best over the last month. So the laggard is catching up. Last session, REITs, healthcare, staples. This is actually all defensive components of the market. So the market was defensive. The market for the first time turned super defensive, but as you can see, utilities has already been there for a little while. Let's jump into the charts, have a look at the S&P 500. The advanced decline line was down. Overall, still held. I actually posted over on X, if you go and have a look, the 5460 zone, which is a 61.8 pullback of that movement in the gap. Now, that's where I suspected we would find some kind of bid. It also was lined in with this trend line here. Did we see a bid? Well, for a few minutes, it wasn't there. What I like to do is I like to highlight these zones, and we talk about it a lot, and then you look for reactions off those zones. Now, that 61.8 was a fantastic level. I like that very much, but we didn't see the reaction. By the end of the day, we did end up seeing a little bit of a bid, but it is down now in futures markets. So let's have a look at the futures markets. And just to reiterate, we do still have fills that can come in here to send us down to 5,300 and 53 75, although I think 53.50 would be the next zone after if we do end up holding these lows. Notice this, we took a new low after going through that most traded last major bear area. We actually tapped into this. Now, we suspected we would see selling around 55.50 to 55.80. Did I think it would do this low that quickly? Absolutely not. I thought we'd probably go like here, find some buyers, maybe then start to buy up. Maybe the 61.8, find some buyers. These were the two main scenarios I looked at. If this market is unable to hold here for the weekly close, it does point towards weekly 20 moving average, which if you go to the weekly itself, really marks out that we should be sitting around that 5,300 level. So we'll just wait for that to update. There's the 5,300 level. Now, this has been consistent with the last pullback. And as you know, during good bull runs, the weekly 20 tends to hold. Even during the bear busts, it tends to hold pretty well. We will have to see how this weekly closes, though. At the moment, very bearish looking candle. There's no doubt that doesn't look like it's done selling just yet. Let's move over now to the S&P 500, 5,400, of course, being a huge put wall level over the last 24 hours. It managed to go through that. This is a very important day. If we don't see buyers come back into this market, they don't push it back above that 54 kind of 30 zone. Again, this is a negative gamma event, and it can lead to further selling pressure, pushing that 5,300, 5,350 narrative. You'll notice as well when we go out to next week, again, negative gamma is taking over in these markets. And where does it all end? All of the ends seem to sit around 5,300. And if you actually look at the OPEXs coming up, that is the expirations in August and September, they look a little bit different now. We've got a lot of 54.50 puts sitting in August, which could suggest that maybe if we do get a pickup, this is going to be, very good expiration for Wall Street to make maximum money. And 5,300 in September, which actually could suggest as well that we do get a rally for August and then we drop into September and October. So yeah, a very, very interesting one, but a lot of negative gamma here. If you are a bear in the markets, you're probably pretty happy and you'll be looking for pullbacks into shorts. If you're a bull, you're just hoping that the market can hold the weekly close. S&P 500 CTAs dropped, then purchased up, then dropped again. And I would suspect that the next data point we get, which should be from the previous session, will probably show actually a pickup and then a drop again. So basically CTAs are possibly in consolidation mode. Now, generally speaking, we see these huge drops like this one here, and that often leads into bottoming effects. So of course, we're looking for TA along with CTAs to actually bottom off. And once those two things occur together, then we start to say, oh, things are looking better. And that's exactly what's happening on some of the other markets. Brent starting to improve. Gold possibly getting a turnaround. And of course, copper also seeing the same thing. Price action improving and CTAs starting to come off the bottom. Nvidia puts, yep, we're well underneath it again. 109 on Nvidia. 110, of course, being the put wall for this week. So we would suspect that Nvidia might be able to hold the 110 by the close. And of course, 120 to 122 is what we expected. So 122 was kind of where we thought we might gap fill to. I think Nvidia got to like 120.9. So it was very close to that. And then it started selling off. I'm not too concerned about Nvidia. I think anything between 110 and 95 is pretty decent in terms of price action and buying. Tesla, on the other hand, still struggling, 217. I will do a special on Tesla moving forward. I do think this stock is going to come under a lot of investment fire over the next coming months, and I'll explain why in an upcoming video. But basically, we are underneath the 220 big put for this week, and again, it could mean stabilization of the market. Now, of course, if we hold under 220, all of this stuff is negative gamma. So if we hold under this negative gamma across the board, and that can sell it through. VIX not quite hitting 20, so we're sitting at 19.4 on the VIX. XHB, which is home builders, dropping here a little bit and not really super worrying. And then, of course, KRE also getting hit hard at 4.48. Now, we also noticed on XLF that it dropped by 1.42%. But is this a double top? Is this the end of the bull run on financials? Again, this is not necessarily a super concerning factor. The mentioned chart we had before was IWM, the Russell 2000 versus the SPY. And you'll notice here that the Russell 2000 has been dropping versus the SPY in the last couple of days, but this is that huge major turning point. And I think this is significant because when you put it in perspective, this could be the most important chart that we're looking at right now, because we're also looking at things like trend lines. Now, if you notice, this actually breached its downward trend line. And from a combo, yes, it's come back down, but this is kind of showing you, plus those stats before, that Russell may still not be done. We'll check that chart out in a moment. And there it is again, just to show you. Now, what about the bonds market? Certainly a little bit concerning here from bonds. They dropped underneath that blue line. We'll see how the weekly ends up closing there and update you. Treasuries looking beautiful, great weekly close. This is pointing towards further gains in treasuries moving forward, although I don't think it's a trade. Of course, it could be an investment or a multi-month position. And copper fell off, which is to be expected, maybe a little bit more than I thought. I'll show you the level I thought we'd buy up at, somewhere around here, 4.12. But now we've got our new high level. So what we can do is we can say, okay, it's hard to stop a freight train down, so it's hard to stop copper's fall. But if copper is now able to break past 4.18, I feel like this is actually the bottoming of copper for now. So we should be able to get 20 weekly mean reversion, all of those things. After non-farm payrolls, we will look at that. So after the jobs numbers. The dollar index came up to the close above bullish level. Didn't manage to get through that, so it's holding there. And it's basically between two different zones into non-farms. We'll revisit on the weekend video. Gold, amazing, fantastic. Love gold at the moment. Obviously super bullish on this. Still super bullish on this. This is exactly why we like gold. If we get volatility, gold tends to do a little bit better. If we get stagflation, gold will probably do better. If we get tons of rate cuts, gold's probably going to do better. So really, in pretty much 3 of the main 4 scenarios, gold is positioned quite well over the next 12 months. And it's one of the reasons we do like this in the market. Silver also performing okay, but not quite above our bullish flip zone. We'll talk about that after non-farm payrolls. And US oil coming back to the most traded area. So looking for a bid here after its very strong gains in the previous session. Of course, above 79 should give us the swing trade. And at this point, day traders will be all over this level, seeing how it reacts to non-farm payrolls. And do remember, patience react, don't predict. Non-farms is well known to go off in one direction, then reverse and go all over the place. So it can be a very volatile event, which can switch the 1 hour after the event itself if it is not clear cut. XLE coming back down to the trend line, so obviously down like the rest of the sectors. 700 or 10 cent. The Chinese market not faring fantastically. You can see here it dropped back down. Still no turn levels on any of these. So we're watching 10 cent the most there. UK 100 not quite to the bull flip zone where we're looking for further bull buys, but still I think quite a strong market. Check out the weekly on that. And Nvidia, while it did drop, it didn't go to a new low. So like the semiconductors, it's managed to hold better, which is showing you relative better performance from this stock and semiconductors, which I think is important because, of course, that's the sector we're most focused on at the moment. You'll notice here semiconductors compared to Nvidia dropped a little bit more, still not really making a new low. So at the time of this recording, I would say they will in the next market, and we're looking for them back to that most traded zone. So anywhere here is not bad for semis, and anywhere here is not bad for semis. Really, we're in that pocket that we'd like to start seeing semis find buying. And I feel like this is the sector that needs to be watched the most over the next coming sessions. Tesla, not much to really report here. Still looking for 210 to 200. Still thinking it's kind of weak. The island reversal probably going to breach down over the next 24 hours. And the US 2K weekly close will be important because, of course, it's been very strong. It's dumped a lot over the last 24 hours. Fundstrat's data is important here, but also we're underneath this low. So I'd be interested to know how this reacts around here. Do we find a buyer? Do we find bid? Are we going to have more of a pullback back to the daily 20 moving average and anchored VWAPs and stuff at around 2120 and find buying pressure here? This is certainly not a super negative market or anything yet. We'll just have to see how it trades. Now, a lot of people are going to say that's a Wyckoff top. We'll see how the weekly closes because that's going to be important for it. And then we've got the NASDAQ. So let's move over to the NASDAQ. New low, major bull zone hit. So this is certainly a key level for me to see a reaction off. It's a bit sneaky because it took the previous low. And if you'd asked me over the last 24 hours, this is very replicable. Again, in our day trading masterclass, this is very replicable. I would have thought we would have got up to the gap fill. Okay, so that's what I was kind of suggesting. And the S&P 500 did manage to do it. It got perfectly into the zone. And the NASDAQ didn't quite rally all the way through there. Then it pulled back. And I kind of thought we'd get some bid round here. Now, again, just because you think something doesn't mean it's going to happen. So I was waiting up for that one to see whether we could get a bid on it. No bid was had. So then, of course, it has to fall lower. In this case, it takes the low. Now, this is still hitting into that exact area that we've had on the chart for quite a few days. Do we have a bid yet? Nope. Do we know this is the low yet? No, we don't. But it's a very, very interesting zone. So we should be paying a lot of attention to this. Weekly close will matter so much this week, and it will tell us a lot about what is next to come. Do we get a 17,350 level to 17,000 level on the NASDAQ, or are we going to see the lows in the market, at least for now? This is all, will we see a VIX 20 over the next 24 hours? All these things will come through. What about the crypto market? Well, we can see here that Bitcoin rallied off those lows. That's actually a beautiful candle. Bull swing zone holds again. Beautiful low steal. September tends to be a monster month for Bitcoin, so that's all coming up. Often we do see a little bit of like movement around like here in terms of just rotation, and actually looks very bullish. I got to say that looks very, very nice on the day trading scale. So we're starting to see, nice pickups. If you manage to get that again, fairly replicable trade. If you took it 100 times, probably going to win like a certain amount of them. That is definitely on the positive side. And yeah, I mean, of course, next target would be around 66.8. So Bitcoin looking completely different like gold to these markets, like the anti-market at the moment. If you look at anything around the world right now, Nikkei, you look at the Asian markets, they're all down big time. Of course, that was a surprise flash sell. Bad news is bad news, or is it? I think it's more of a tantrum towards getting a cut. The underlying earnings are still pretty much meeting targets. Yes, there's been a couple of misses. This time is always volatile, and it really comes back down to Nvidia being the most important earnings. And of course, AMD did end up holding up. So although it dropped over the last 24 hours, it didn't have the worst earnings. So it's a lot of unwinding here, a lot of freak out. Non-farm payrolls, that might be a big turning point. And of course, in the markets, you've always got to put it in perspective. What is your aim? Is your aim to do day trading? Well, then you're going to have to look at those major levels. We knew we filled a gap. A lot of you messaged me and said, Tom, I took off Nvidia. I just wanted to get out of it. Or Tom, I took the S&P off. I'm so happy at that level. Fine. Over the last 24 hours, there was almost an excellent buy opportunity again, but we just didn't see bid. So we have to see that. Join us on the weekend video. We'll be talking about the bid. And yeah, a little bit disappointing, honestly, to see it back down so quickly, because this is great for day trading, but it is a little scary when you consider the volatility, because this type of volatility means that we're in a fragile market. So we're in a fragile market condition that is reliant on central banks to be supporting it. And of course, when they're supporting it, something's broken generally. And that gets us into this late cycle worrying point. Again, like we've been reiterating, utilities and gold are definitely a safety point, and AI stock is the bubble. So the question then is, do we get another big run in AI? I tend to think so. Interested in your comments down below. Thank you very much for the comments, by the way, guys. I do read many of them. And yeah, it's been interesting watching the last couple of days to see what you guys are saying. All right, 7-day flash sale also, if you're interested in finding out more about our course stuff, and follow us on X if you're interested in seeing some of the charts. At 61.8, just didn't hold. Let's see if we can get a bid over the next 24 hours. We'll see you on the weekend video. Bye for now.